Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very beautiful weekend and a very good day of trading as well. And in today's markets, guys, well, we're getting ready for arguably the most important week of the entire year. Yes, it is finally the time for us to get those infamous rate cuts from the Federal Reserve. Is it going to be 25 basis points? Is it going to be 50? And what are the impacts potentially going to be on the markets? Well, we're going to take a look at that in the introduction of this video. Thereafter, we're going to take a look at some of the, well, actually one of the major news headlines today that piqued my interest, and that has to do with Intel. Intel having a very good day today, getting a ton of news events on the same day. They were up about 6% in regular market trading and up an additional almost 8% in the after hours. So what exactly happened with Intel today, guys? Well, we're going to take a look at that in part 2 of the video. Thereafter, we're going to go through our major technical analysis rundown of our major stock market indexes first, and then take a look at our big tech names to wrap it up in terms of whether or not there's still some good deals to be had within big tech. And lastly, take a quick glimpse in my portfolio to see how I am positioned into this very big week of possible volatility. So without further ado, guys, a lot to cover today. Let's jump right into the action. So SPY up a decent 0.15%. QQQ, however, trailing behind about 0.44%, and that was largely due to big tech's performance, right? So big tech having a rough day today, to say the least. I mean, there were a few green names in Microsoft, Google, and Meta, but not that much expansion. The red really came from Apple, NVIDIA, Broadcom, Amazon, and Tesla, all leading the way to the downside. But for the most part, guys, the market was relatively healthy, very broad, and a very good rotation today. Consumer defensives were doing good, financials doing good, healthcare doing good, and the industrials and interest-sensitive sectors were doing well as well. Utilities continues to be one of your outperformers. On the one-day relative, you can see that even better. Everything pretty much coming back in the green here today. The only downsides were consumer cyclical, also known as consumer discretionary for obvious reasons, of course, right? Consumer's kind of weak right now. And the technology sector once again led to the downside by a lot of your big tech names. So that is pretty much the markup for the landscape, for the market rather. As you can see, fairly good rotation, but we have a very volatile week of trading ahead of us. Let's take a look at some of the catalysts, shall we? So in terms of tomorrow, we get a very important set of data, and that is going to be for retail sales. Now, we know that the economy has been getting a little bit weak recently, and a lot of that has to do with the consumer kind of running out of purchasing power right now as they struggle with higher prices as a result of high inflation for the last 2 years and high interest rates as well. All of that has taken its toll. So in the event that we get a very negative retail sales read well below the consensus, I would expect the markets to really react negatively to the downside. So be careful with this one tomorrow. And then we come into the massive day, which is obviously Wednesday. Wednesday's important for 2 reasons. Well, number one, of course, it is the rate cut day. But number 2, we also get what we call the summary of economic projections, otherwise known as the dot plot. That is where all 16 members of the Federal Reserve give their best estimates as to where they believe interest rates should be within the next 2, 3, and even longer term durations in terms of further out in the future. We're going to get a lot of information from that summary of economic projections. It's going to let us know whether or not the Federal Reserve wants to embark on a very quick interest rate cutting cycle, or whether or not they're kind of going to do a slow cutting cycle. Both of those obviously have their pros and cons for the market. A quicker interest rate decrease cycle, guys, would mean perhaps that the Federal Reserve is slightly worried. Now, that also ties into whether or not they're going to do 0.25 or a 0.5% interest rate cut. We can see here from the Fed rate probabilities right here, right now, 67% odds of a 50 basis point cut or 0.5%, and only 33% for a 0.25. Now, this has flipped significantly since that CPI report came out last week. Last week, after the CPI report, we were pretty much sitting at only 30% odds for a 50, and a majority of people were estimating for a 25. That has now flipped after some comments by some Federal Reserve members on the Thursday and Friday sessions, hinting that it might just be time for a 50. Well, that is exactly what's happening right now, guys. The rate probabilities have flipped towards the 50 percentile mark, or rather 50 basis point mark for a larger portion of your betting odds right now. And usually the Federal Reserve does do in line with what the market is expecting. Usually it does not go against what the market is expecting. And this has been the case now, guys, for about about 3, 4, 5 years in a row right now. So in the event prior to Wednesday, right, on tomorrow's session after the close and possibly into Wednesday morning, if this is well above 60% as it is right now, I would not be surprised, guys, if indeed we do end up with a 50 basis point cut. Now, this has its positive and its negatives, right? Which is why, if you ask me where the markets are going to go after the rate cuts, guys, nobody knows. As I've been saying in the past week, guys, nobody knows. And if somebody is telling you that they know for certain where it's going to go, just stay away, right? Don't listen to them. At best, it's an educated guess. Yes, probably. And if they are correct, they will think that they were able to predict the future. But it's not actually so simple, guys. There is so many different criteria at play right now. The economy, the jobs market, and in terms of the rate cut amounts, right? If you come in with the 50 basis point cut, you're basically telling the market that you're kind of behind the curve and that the Federal Reserve might be a little bit worried about some underlying data that maybe we haven't dove into too well just yet as other market participants. So there's always that worry too. But in the event they were to do a 0.25, well, then everybody would criticize them for being too slow, right? So you can play this really either way. As per myself, I would rather not guess. I'm going to wait after we get the interest rate cut and the summary of economic projections to know how are the further rate cuts going to be as well. And then we will position accordingly in the markets, guys. I keep telling you guys this. We're not in the business of predicting economic events, right? We're in the business of reacting to it and positioning our trades accordingly for those factors. So that being out of the way, guys, hopefully that was insightful into our rate cuts. We're going to talk about them tomorrow as well after the close on the Tuesday session. Now, in terms of what else is at hand right now, well, of course, we have Intel coming out with some very good news today. So the stock was up about 6% in normal market trading and up about 7.5% in the after hours. So what exactly happened with Intel today? Are they finally embarking on the recovery story? Well, let's have a look here, guys. And they hit us from all sides with news today. So Intel stock jumps on plan to turn foundry business into a subsidiary and allow for outside funding. Now, I'll remind you, one of the problems with Intel recently, guys, has been the destruction of their free cash flow and their net margins as well for trying to expand the foundry business. The foundry business is them trying to manufacture semiconductor chips to obviously sell to third-party participants, right? The leader of that industry right now is Taiwan Semiconductor. They are literally a generation and a half ahead of Intel in terms of the technology utilized for that business. You can see what's happened right here, guys. Free cash flow absolute crush in the last couple of years as they've spent over $40 billion trying to expand the foundry business, and investors were just sick of them losing money on that business as a whole. So now finally, they've come up with some plans to remedy the situation. Let's have a look. So Intel shares jumped 8% on the Monday session and more in extended trading. It plans to turn its foundry business into an independent unit with its own board and the potential to raise outside capital. Very interesting. As part of the CEO's efforts to turn around the struggling chip maker, Intel said in a memo to employees that it will also sell a part of its stake in Altera. Gelsinger, the CEO, said that the restructuring would allow the foundry business to evaluate independent sources of funding and comes days ahead of after Intel's board met to assess the direction and future of the company. The foundry business, which Intel plans to use to manufacture chips for other customers, has been a big drag on its bottom line, with the company spending roughly $25 billion on it in each of the last 2 years. Way too much money, guys. Intel is weighing whether to spin off at the foundry business, possibly into even a separate publicly trading company. Very interesting, right? With a standalone operating board and a cleaner corporate structure, the mechanics of a separation became far easier than trying to turn a fully integrated unit into a separate company. Now, moving on further, the company has given up market share in its core PC and data center business and watched NVIDIA run away with the market for chips that power artificial intelligence workloads. Not only NVIDIA, but also their closest competitor AMD as well has just been running away with them, just leaving Intel behind in the dust, guys. In August, Intel reported disappointing quarterly results, sparking the sharpest sell-off in 50 years, and said it would lay off more than 15% of its workforce as part of a $10 billion cost reduction plan. So you can see, guys, management understands that there's a problem right now and they're doing everything in their power to possibly fix it. This is what I like to see. So Intel will also pause its fabrication efforts in Poland and Germany by approximately 2 years based on anticipated market demand, and pull back its plans for its Malaysian factory too. US manufacturing projects will remain unaffected. So 15% layoff of the workforce, cutting back on factory production right here, or rather the creation of these factories. What are they trying to do, guys? They're trying to shore up their balance sheet. They want to get back to free cash flow positive territory and stop hemorrhaging money for shareholders. Earlier on Monday, Intel was awarded up to $3 billion from the Biden administration and the CHIPS and Science Act in an effort to bring chip making to the US. So this is the news that initially sent Intel popping over the course of the morning, guys. That was it, right? So this news here about the foundry business, that was after hours news. The one this morning was the fact that they got another $3 billion from the Biden administration. Now, moving on as well, after the close here, guys, what did they get to? Well, they're expanding on their deal with Amazon. In addition to the foundry announcement, Intel said it entered into a deal with Amazon Web Services to produce custom chips for AI, extending a long-running partnership between the two companies. So a lot of bullish news here, guys. Renewed partnership with Amazon, $3 billion extra dollars from the US government, and pulling back on, or rather, potentially separating their foundry business into a completely different entity that can raise outside funding for the business, right? So everything positive for Intel right now, which is why I'm very happy with this, guys, because I do have somewhat of a lottery play on Intel for December of 2026. I've always been of the opinion, guys, that this company is too big to fail. The US government will not let Intel fail at all, guys. It's just too much, there's too much security risk having that business potentially being encompassed by a company that is not US based, right? Think Taiwan Semiconductor or think Chinese competitors, things like that. The US government will never let this one go bust. Trust me on that. So Intel, very interesting, guys. Is it the time to buy? Well, I have already bought, and I'll show you those. I've already bought a few weeks ago, as a matter of fact, and I'll show you those positions to maybe give you some ideas in or around how to trade this one. I wouldn't put it as part of a long-term portfolio, but for a recovery story, could be a very interesting trade. So we'll have a look at that at the end of the video. So now moving on, now that we got those items out of the way, let's dive right into our technical analysis, guys. And the technical analysis for this week is going to be excessively difficult to derive, guys. Why? Because of the rate cuts, right? The rate cuts can move the markets 2% in either direction and start a longer lasting trend. We know that the months of September, guys, are infamously bad. Take a look at this. Here is your September seasonality, and you can see that around the midpoint of the month of September, this is all the month of September, around the midpoint, literally where we are right now, we start to try and take a turn for the worse. Now, obviously, rate cuts, the event on Wednesday can kind of help to counterbalance that or help accelerate that to the downside. So that is why technicals, at least for this week, are going to be fairly difficult to predict, especially in terms of whether or not the bulls and the bears can hold on to certain levels, right? We may just get blown away. Now, in terms of the SPY, very obvious technicals right now, all-time high area of resistance. We are almost there. The best case scenario would be mounting over and above this level of resistance prior to the rate cuts. And then if ever rate cuts are bad, well, maybe we can just come back and sit on this huge area of support that we will have built upon in the last few weeks of trading, right? Now, in the event things are negative tomorrow for retail sales and into rate cuts, we'll take a look here, guys. Your first support area is 556 down to about 553. Lose that one and you're back down here, 546 down to about 535. So the bull's still trying to go for the daily higher low for possible further daily trend continuation and also for possible weekly trend expansion beyond the all-time highs. But those two things are entirely predicated on receiving good data tomorrow on the Tuesday session for retail sales and also having a favorable outlook for interest rate cuts in terms of how the market reacts to them, right? So that's pretty much everything for the SPY. Now, in terms of the QQQs also pretty much in the same boat right now, right? What are we trying to do? Well, it was a daily downtrend, big engulfing move. We are looking to set up for a daily higher low for a possible recapture of the daily uptrend. Now, if tomorrow and Wednesday are bad, we do have a little bit of cushion down here, guys. The support is 467 down to about 455. Would not like to see the bulls lose this, guys, because if they lose these lows, especially those ones, that would be establishing a new form of weekly downtrend and would definitely not be the best for the markets. Obviously, to the upside, if we get a break of the prior range of resistance around the 480s, that would give us a brand new weekly uptrend leading into the tail part of September, which would be your best case scenario. So be on the watch for both case scenarios, guys. The way I'm going to be trading it, I will explain at the end of the video. So, but it has to do a lot with option selling, right? I'll be looking to write options on stocks that come down very, very hard in terms of the remainder of the week. Moving on to XLF right now, financials moving really, really well today, 1.28%. And what do we have hitting a new all-time high today? Well, I'm glad you asked, guys. One of the stocks that I recommended literally all the way down here. Beautiful trade, right? Thank you very much, guys. Appreciate it. And MasterCard as well, on to brand new all-time highs too, which is what we were recommending back here on the channel. So if you guys were able to make some good gains from those, well, no problem, guys. I got you, right? So financials looking very, very nice today, recovering from the last week's drawdown. So as we can see right now, guys, they're trying to make an attempt here at a daily form of trend change. Now we have a 100% engulfing move, creating a lot of space off the lows. Anything above 43.40 at this point, going to be looking for a new daily higher low for a possible further trend change attempt by the bulls. If we engulf even more, we create even more space, and it becomes that much easier for the bulls to do the two-step daily uptrend recovery. Why are we biased bullish, guys? Well, because we never lost the weekly uptrend on financials, looking very good for some weekly trend continuation. One of the ones that I like in financials the best right now, as you'll see at the end of the video, is Berkshire. Berkshire coming down for a beautiful, right, nice weekly uptrend breakout of the range, retest of the range, and possibly run. So I did take a position on this one. I'll show you guys at the end of the video. Now moving into XLV. XLV looking really, really good. Daily uptrend well in motion for the bulls right now. Any form of pullback going to be looking for a daily higher low. Anything above 153, let's call it, looking for the daily higher low for further trend continuation. Why are we bullish biased, guys? Good thing you asked. Well, we were in a very nice weekly uptrend, and we were always looking for a weekly higher low for possible further trend continuation on XLV. So healthcare continues to be an outperform sector for me right now. NVO is the one that I'm in currently, as I showed you guys last week. Just looking for a little bit of monthly bull flag right here into some continued expansion, possibly into the later part of the year. And the other ones that I'm always on the watch for here, guys, if we get a retest right, AbbVie, if AbbVie for some reason comes back down to the low 180s, I'd be interested there. And of course, UNH, one of your big ones, if they come back to around 555 level, that would be a gorgeous monthly breakout, retest, and possibly run. So those are the names that I'm paying most attention to on healthcare. Moving into SMH right now. So SMH coming down about 1.31%. That's normal, guys. Pretty much everything in semiconductors had a little bit of a pullback here today, except for Intel for a change. So at this point, guys, a little bit of pullback, right? So not too big of a deal. We have had a very nice 5-6 days worth of rally. Now just looking to set up for the daily higher lows for possible daily trend change back to the bulls. So we'll be watching for that. They definitely did create enough space, engulfing the entire move, looking to set up for the daily higher lows for the possible trend change. So I'd be keeping an eye down here, guys. Anything above 214 is going to be looking for that trend change. Would not like to see them lose 225 though, guys, because that just gives too much move back to the bears, sets yourself up for a new daily downtrend and really plummet back into these lows right there. So really maintaining 225 is going to be essential to the bulls' ability to continue even on this weekly momentum that they've built up right now, trying to go for the weekly trend change. But if ever rate cuts are not kind to us, then we may just devolve into either a weekly downtrend or at best, somewhat of a tightening range over time, similar to what we had pretty much last fall as well, while semiconductors just consolidated. Now, the other sectors that we're going to look at, guys, is IWM Russell. So the Russell not moving too poorly today as well, 0.36% to the upside. And the Russell really just coming up and trying to challenge our previous areas right here, right? This whole big range up here, 220 up to about 225 is going to be quite a challenge for the bulls. This will be entirely dependent on rate cuts, guys. If Jerome Powell is very dovish with us and the path of rate cuts is an accelerated one, then I would expect possibly this one to run. However, if the Fed is kind of maintaining a front load of the curve, meaning that they're going to do 50 basis points now and then slowly do 25, 25, 25. So a slower pace of rate cuts over the next few months, then the Russell may not respond in the best fashion of this one. It could possibly go up, but it's not going to shoot up the same as if you'd really front load the curve, right? What am I doing? This is definitely not a Picasso painting. Sorry about that. So in terms of the Russell, now, take a look here, guys. Daily downtrend was clear as day. Nice little bounce underway. Take a look at the size of this bounce, guys. It definitely is a juicy one. over 80%. So this does give the bulls a very good opportunity, guys, at possibly setting up for a daily higher low and getting the trend change back, and looking also to potentially extend this weekly momentum if they can get a break of 222 on this weekly close with very good interest rate data. Then we may just get the new weekly uptrend and start possibly challenging the previous all-time highs once again. So the Russell admittedly is not looking too bad. I'm not in it myself. I have my reservations as to this trade because I just need to see more data out of the Fed and how the growth story is kind of going to be accepted by the markets, right? But definitely not looking too bad at a first glance, guys. The bulls are looking good for some short-term trend recapturing. The weekly is not really in jeopardy still, and the monthly as well, right? We never really lost the monthly uptrend either, just trying to set some higher lows and maybe make an attempt at some all-time highs, perhaps later on in the year when we get through a bit of this weak seasonal period. And now lastly, the Dow Jones up about 0.55%, not doing too bad at all. Dow Jones, new all-time highs today. Congratulations to them. So daily downtrend was underway. Big engulfing move by the bulls, looking extremely good. So at this point, any higher low, guys, going to be looking for anything above 40,000 daily higher low for possible further trend continuation. Why do we have a bullish lean? Well, I'm glad you asked again. Weekly uptrend was never lost, guys. Just a little bit of a back test right here. Higher lows are set and looking for that trend expansion. Now, obviously, with all these indexes, guys, a lot of these levels can potentially be challenged both to the upside and towards the downside of our prior weekly lows, depending on how we are going to get the interest rates, guys, right? So I know it's a lot of ifs, if-then situations for the technical analysis right now, but I'm just going to reiterate, guys, right? I don't want to lie to you. I don't want to say that one thing is definitely going to happen with these rate cuts, right? Nobody truly knows. It's our jobs as traders and investors, depending on the outcome of the situation, we're going to find the best opportunities for us at that point. And I'll talk more about that leading into, in tomorrow night's video when I present a few trade ideas leading into the rate cuts, okay? So now moving into a little bit of big tech, shall we? So moving into Apple right now, Apple down about 2.78%, not having the best day at all, guys. This was because of the fact that the pre-orders for the new iPhone 16 weren't all that hot. So let's take a look, right? They retreated nearly 3% on Monday. The demand for the latest iPhone model lagged forecasts during its first weekend on the market. The pre-order sales for iPhone 16 reached 37 million units. That is down almost 13% for the first weekend sales for the iPhone 15 that came out last year, with the largest decline estimated sales seen for the iPhone 16 Pro series. That's not very good, guys, because this is one of their highest margin phones, right? So very unfortunate for them, guys, right? They blamed the subdued demand on the company introducing its iPhone 16 Pro, but lacking its new artificial intelligence application, with Apple Intelligence to become available at a later date. This is literally exactly what I said after Apple's AI event. The fact that you would get an AI-enabled iPhone, but then you have to wait like a month and a half to actually get the software on the phone. So it's normal that people are kind of waiting back on the pre-orders, probably going to wait to see a lot of tech reviews when the phone actually comes out, and possibly people are just going to wait on this one, right? So maybe the initial sales forecast and pre-orders aren't going to be too good, but then maybe when we get some hands-on reviews of the phone, maybe that could stimulate some sales. But like I said, guys, I'm still unconvinced as to whether or not this is going to represent a massive upgrade cycle for Apple and get them out of their little bit of a revenue growth slump that they've been in now for the past 6 quarters in a row. So Apple, of course, on that news was down about 3%. And now, unfortunately, guys, Apple in a continuation of the daily downtrend. So I'll remind you what's going to happen, guys. Probably just looking for a maybe lower high at this point in the 220 range. A lot of resistance going to be above us right now. If we get the lower high and lower low flush, guys, and lose this whole support zone, right? 220 down to 215. We're barely holding on to it right now. If we were to lose this one, then the next support undoubtedly comes at the 208 level. And further below that, which is where I'm personally waiting for Apple, is going to be around the 200 to around 195. So in terms of the weekly still not looking too bad, guys. We're trying to still set up for the weekly higher lows, but in the event we start rolling over further and further, we may just get somewhat of a massive tightening rate. Let me move this text over real quick. Sorry about that, guys. We may just get a massive form of tightening range as Apple kind of deals with these issues of flat flatter than expected revenue growth, and weaker than expected pre-order sales, right? So that's pretty much everything for Apple. I will not be playing it until I see Apple back down here in the 205 to 200 area. If it doesn't get there, no problem at all. I have my long-term portfolio shares, but for any swing trades, I'm going to be very greedy on this one and be patient. The valuation up here is just way too high for me. Moving on to AMD, give me a very brief second. AMD down about 0.15%. This one was featured in the top 5 options video yesterday. So what we might be looking for AMD in the event that semiconductors continue a little bit of a pullback, well, keep in mind, guys, the big area of resistance is right here, right? 155 up to about 162. You can see how challenging it's been for AMD to break through this zone. And when they get stuck in it, they get stuck in it for a long time, right? Support here, resistance here, a bunch of congestion right here, big support there. So this zone is a very big one for AMD. And if they remain weak over the next few days, or if retail sales or the rate cut news is not well received, we'll expect a revisit lower. What are the bulls trying to do? Well, I'll remind you, daily downtrend was underway for AMD, engulfing move. Now the bulls are looking to create enough space to set up for that daily trend change. So eventually we'll be looking for a daily higher low for possible further trend continuation. Where could we maybe come back down into, guys? 142 is where the big area of support, this green box, starts right there. 142 down to 137. If we were to pull back into the lower 140s, guys, it's going to free up my favorite trade on this stock. Short puts below 137. If I can get some opportunities to write some short puts below 147, I will probably be taking them. So once again, we will need a little bit more declines on AMD to free up some of those short put trades. And maybe even if you're looking to make a long position, guys, I wouldn't be looking long here into resistance. Sure, it can work sometimes, right? But it's usually not the best risk to reward. Usually you want to wait for a daily higher low to be set and then get a better entry and possibly attack that resistance zone from a little bit lower, right? So that is my take on AMD. As of now, it's not looking too bad, but then again, the bulls really have to do a good job this week of putting together the weekly follow through. And this week is going to be up for grabs for anyone, right? If the rate cuts are received in a bullish fashion, then you can get the weekly uptrend break of this resistance zone. But if they're not, we may just continue into this tightening up of the range. Moving into Amazon right now. So Amazon now, well, you can see, guys, what we're expecting, right? This little blue arrow. So that's pretty much exactly what we're expecting. Amazon kind of getting rejected here from the 189, 190 range. Normal. It's been a big area of resistance for the company pretty much all year at this point. 3, 4, 5 touches right there. So right now, Amazon looking very good. Daily uptrend underway. A little bit of weakness recently. What are we looking for here, guys? Looking for the daily higher low for further daily trend continuation. It's not looking too bad at all. Just follow the blue arrow, right? This is like the crystal ball arrow. Not really, but you guys get the point, right? That's the setup that I'm looking for. Coming back into the moving averages as well. Could be a very, very interesting swing trade for Amazon using all of this resistance as support with the moving averages, right? Could be a very interesting swing trade back into the 189, 190 level. So that's what I'm going to be looking for Amazon in terms of a short-term swing trade setup in the form of this week. And now moving forward, guys, in terms of the weekly, well, the weekly has always looked good for Amazon. They just recaptured the new weekly uptrend. So if anything, we're probably just looking for some continuation into this 190 resistance. So Amazon not looking too bad at all. That's the type of setup that I'd be interested in taking on this stock over the course of this week. Now, moving into Google, apologies. So Google not looking too bad either, right? 0.39% to the upside. Google really doing a good job of coming off its base and trying to set up for a new daily trend change. So now you can see we have an almost 100% engulfing bounce. The bulls have created a lot of space off the lows, guys. So at this point, whenever this move does top out, going to be expecting the bulls to set up for a daily higher low setup for a daily trend change. That is step number 1, guys. We need the daily trend back. We have not had a daily uptrend since back here. So that is step number 1 for the bulls to execute, right? Maybe come back, pull back down. If we get a little pullback down here, 154, 152-ish, could be a very interesting opportunity for those of you who have missed Google to maybe start buying some of those dips. I mean, right now, it's still a very good, attractive opportunity, right? Still 20% off the all-time highs into a very gorgeous area of weekly support. Prior all-time highs should be reacting very nicely there. So that's what we're going to be looking for on Google. Step number 1 is getting the daily trend change underway. And step number 2 will be how high can we come up in relation to this weekly move right here? Because as you can see right now, the bounce size is underway, but it's only about 50%. I need them to come a little bit higher, maybe into the mid 160s to really give the bulls a better chance of being able to flip even the weekly into a new weekly uptrend. So that's the setups that I'm looking for on Google. You guys know me by now. I already have a bunch of Google positions that we bought in these lower ranges here. So that is just how I'm looking to play any future price action on the company. Moving into Meta right now, Meta 1.65% to the upside, and Meta's going for it, guys. Keep in mind though, right? Of course, it's going to be tough for Meta if tomorrow's data is not well received and Wednesday's data is not well received. Well, we may just once again fail a breakout of the all-time highs for the 1, 2, 3, 4th, and 5th, and possibly even 6th time, right? So still trying to move through this resistance zone, 531 to 535, down about 515, but they're looking not too bad, right? They're doing the best that they can right now with the data that we have. So nice daily engulfing move right now. If the bulls do take a little bit of a breather, cannot get it done, we'll be looking for a daily higher low for a possible further daily trend change. What I would love to see from Meta at this point, guys, give me a solid break above here. Give me a break up here towards 550 and then come back and sit on it. That would be a nice breakout, retest trade and run. If we get that retest trade, guys, after a break and retest, this is where I'll be taking a swing trade for Meta, possibly taking me up into the 575 all the way up to 600 psychological would be the target for that type of trade setup. So not looking too bad, and looking at the higher timeframes as well, guys. Higher timeframes looking very good for Meta, right? This is looking very good for a weekly trend break and weekly trend expansion to the upside after, several, call it 6-7 months of consolidation and never really losing the monthly higher lows and monthly uptrends either. So Meta is just waiting for that breakout. Can they get it done with the rate cuts? We will see over the course of this week. Moving into Microsoft right now. So Microsoft up about 0.17%. Not too bad of a day for them, but still trying to break through this area of resistance, right? All the way up to about 435. So 435 is going to be that challenging area for Microsoft once again. In the event we get rejected from here, guys, well, at least we've created a ton of space from the lows, right? So pretty much anything above 400, going to be looking for the daily higher low for a possible second attempt at this trend break right there. Where we could come down to is maybe your moving averages right here and the base of support that's formed in this general location, 415 up to about 420-ish, let's call it, right? So something like this could be in the cards for Microsoft. The other style of trade setup I'd be looking for on this company would be a break above our resistance, maybe all the way up to about 445, this next little level right here, up to 445, and then maybe retest this range right here. And that would be a gorgeous opportunity for a buy for the potential trend continuation. We'd then be using this whole area as a zone of support rather than resistance. So that's a bit of a setup that I'm looking for on Microsoft because we know now we have the weekly uptrend. So any of these daily pullbacks, guys, are buying because we now have the weekly uptrend back. Hopefully that makes sense. Now moving into Netflix. Netflix also not looking too bad today, 0.08% to the downside. Still just struggling with our all-time high area to break out from right now, right? So this one as well, highly predicated on the direction of that the markets decide to take after those rate cuts. So let's see what happens, right? Daily uptrend is clear as day right now, rejecting right now from our all-time high resistance. You can see this even better, right? Prior all-time highs on Netflix, just not able to get it done right now. But if rates are favorable, I would not be surprised if this one is poised to really explode to the upside. They've been coiling up, guys, waiting for it. Even on the weekly, you can see nice little weekly higher lows are set into the 12 EMA and now looking to push this weekly trend higher. So Netflix looking like one of your prime candidates, them and Meta really, to push the all-time highs in the event the data this week is good. In the event this data this week is bad and really pulls down the markets, well, at least we know there's a big area of support below us here for Netflix, 655 down to about 630. Moving on to NVIDIA right now. So NVIDIA also not looking too bad today, despite being down 1.95, really just following semiconductors down, right? So daily downtrend was underway. We got a very nice size bounce, and now we're looking for the daily higher lows to try and challenge this area of support once again, or area of resistance once again. I should really put this as a red box, my mistake, because then you'll just be confused if I'm using support or resistance. So now hopefully it should be clear. This is indeed a zone of resistance, right? So we're still not through it just yet. So in the event the bulls need to gather themselves a little bit more down here before breaking it, perfect. The way that I'm going to be playing this, same thing I talked about last night, the top 5 options play video. If we come down and start revisiting 110, 111, I'll be running short puts all day here, guys, 105 and below in this lower section, where I do believe it's a larger area of support for your bulls down there. So NVIDIA, I wouldn't rule them out just yet, right? We're trying for the daily trend change, and we're also trying for the weekly trend expansion too. However, we may just get stuck, guys. In the event semiconductors are still kind of out of favor with the markets have been favoring a lot of defensive names so far. You can just see that from the sheer outperformance, right? Every single day, the QQQs are down. You can see what's up, right? Financials, healthcare, consumer defensives, utilities, and real estate just running away with it right now. Semiconductors haven't done anything in like 2-3 months at this point, guys. It's normal. It's a cyclical business, right? Sometimes things run and sometimes they consolidate. In this case, consolidation for NVIDIA, undoubtedly. So might just have a little bit of consolidation, similar to what we had last fall. Consolidation is not a bad thing, guys. It allows a company to kind of grow in to its valuation up here, and it also allows them to cool down the longer term time frames that have been extended for a very long time. So that's my take on NVIDIA. I'll be patient for it. If it does come down, I'll be looking to play some short puts. Now looking on Tesla as well, trying its best to defend this area right here. We do have a nice daily uptrend forming right now, but we're kind of stuck, right? We really do need the daily higher lows to be set and break out. Give you a breakout, guys, of about 235. The next stop is probably going to be around 246, 250. This gap fill location right there, leading into the hype of the robo-taxi event, which should be about the October 8th, if I'm not mistaken. It's either 8th or 18th. I'm not too sure. But then they also have earnings coming up then too. And we get deliveries at the end of the month of September too, right around here. So a lot of things coming up for Tesla, but this one is obviously beholden to the rest of the market. If the rest of the market is bearish leading into tomorrow's retail sales and possibly the interest rates as well, well, then expect Tesla to maybe re-challenge these lows down here, talking about 210. And if we were to lose those guys, well, unfortunately, you would be kind of losing your weekly uptrend momentum. We may just delve into this kind of tightening up of this range, kind of trapped between the 230 and about $200 range right now. Where I like playing this one the best, guys, is in the event we get a big time flush down here to 200, 195. I'd probably be looking to play it down there. Up here, it's still a little bit too high for me. And now lastly, Palantir. Palantir not looking bad at all. As a matter of fact, they're looking gorgeous. They continue to push higher on the levels, looking very good. Daily RSI getting a little bit overbought. And we are coming into kind of our terminal area of our last area of resistance, right around the $38, $39 level. So obviously, it's very tough to tell when this move is going to top out for good. One thing that you can look at though, guys, is we can't predict where the actual top is going to be, right? But I'll tell you how to recognize a top when it happens. You need to see a loss of the hourly time frame and a loss of this 12 EMA, which has been the guide since this explosion right here. So in the event we lose the daily uptrend with lower highs and lower lows, wait for the confirmation pattern plus loss of the 12 EMA, then of course you are going to be in for some daily consolidation. And at that point, we'll just be looking for a higher low. Anything above 29.50, looking for a daily higher low for possible further trend continuation. I'd be targeting this range right here, maybe 32, 33-ish dollars down there. That could be a likely area where we pull back into. On the weekly, same thing, right? Gorgeous weekly uptrend right now. No red flags other than being slightly overbought on the weekly RSI. So in the event we do pull up into here, get rejected, may just be looking for a weekly higher low. And once again, target the previous weekly highs. 32, 33 could be the fallback area on Palantir, but looking excessively strong, guys. Congratulations to all of you who have been Palantir holders so far. It's been a very good year for us so far, if I do say so myself, right? So that's been pretty much everything for our stock analysis today, guys. Hopefully you enjoyed that. Now let's dive into a little bit of the positions that I still have open in the account. So guys, you'll see that really nothing has changed in the portfolio except for one position. This is because I'm playing this week defensively, guys. I did not want to open a lot of short puts today, even though there were some opportunities on NVIDIA, some on Apple, some on ON Semiconductor. A lot of the top 5 options plays I gave last night were offering opportunities, but I'm not taking them today. I'm waiting for batch 1 after retail sales. Then we might get some dips if it's bad, and that's where I'll be looking to write some options tomorrow. And then for the rest, guys, I'm going to be extremely patient. I am waiting for rate cuts. I want to see the data first, and I want to see the summary of economic projections. What are they thinking for rate cuts in 2025 and 2026? I want to see the trajectory so I can know which industries and which stocks to better position myself into. So that's why I kept the trading very light this week, but I didn't close anything in relation to last Friday. Everything else is still the same. We covered everything in detail last Friday, so I won't go over everything. The one new trade that I did open today, guys, I felt I should share with you is some Berkshire, BRK.B, bull call debit spreads. We got 5 of them for $4 each, so decent sized position, about $2,000. As I told you guys in the Friday video, I'm going to start cutting down. It's been a very fun process showing you guys, the smaller contracts, bull call debit spreads, some put credit spreads sometimes, smaller swing trade positions, really trying to cater to all of our viewers who have smaller account sizes, right? But what I'm going to do now moving forward, since it's getting closer to the end of the year, I want to juice up the gains in the portfolio, and I'm going to be going back to my previous sizing, right? My previous sizing and my previous strategy of majoritively trading the wheel and also large call option size contracts on high conviction plays, right? So that's going to be the mantra moving forward pretty much. We're going to pretty much stop some of the small account strategies in the portfolio at the end of the month of September. So you'll see, right, I do have a lot of trades right now. It's not difficult to manage at all because all of these are weekly trade, well, not on a per week basis, right? These are done with weekly time frame analysis. So a lot of these take 2, 3, 4 weeks to play out. So I don't even need to check on any of these trades more than once per day. So it looks like there's a lot of them, guys, but they're very, very passive in terms of management. These are not all day trades, right? Or trades that I'm looking to close in 1 to 2 days. So that being said, the only trade, so you'll see a net decrease in the amount of positions in the portfolio, and you'll see a concentration, a bigger size into a lot fewer positions, the same as I was doing up until 2 months ago when I promised you guys I would show you a bunch of new small account strategies, right? And doing a lot more companies frequently. So that being said, the new position that we opened today is on Berkshire. So Berkshire got some call debit spreads right here. 460s versus 470s for November, so about 60 days worth of time. And I just like this one a lot, guys. Coming back down, perfect retest of our previous highs right there. As you can see, weekly breakout, retest, and possibly run. On the monthly as well, looking very good. Monthly, retest, and possibly run. And the key for me was the 4 hour, guys. The MACD on the 4 hour is looking quite good right now in order for a little bit of reversal. And we're finally getting some of that hourly trend change as well. Finally, a new hourly trend change confirmation. So I took it midpoint during the day, going for that trend change and going for a little bit of share appreciation, possibly back into the 460 area. So that is pretty much my only trade that I put on for the entire day here, guys, right? So I'm taking it very, very light, but of course I will be adding on Tuesday and Wednesday after the data, and I will share those positions with all you guys. Another thing I wanted to show you, because I don't think I gave you guys an update recently, right, is the garbage portfolio, essentially, right? The dumpster dive portfolio, the time machine portfolio, the recovery story portfolio, whatever you want to call it, right? About 3 weeks at this point ago, I promised you guys I would put $1,000 into some truly beaten down companies and just see where we can end up after maybe a year, 2 years of just sitting in them, right? Well, I'm happy to say we're actually up on our funds right now. We are up pretty much a whole $13, guys. So in relation to the S&P, let's go have a look right here. So in relation to the S&P, you can see we are now finally outperforming the S&P 500 by about 1%, right? So not enough to really gauge whether or not the strategy is working, obviously. But I mean, you know, some positions, I'll go through the list right here. I'm not going to go through each one, but you guys can see here's the total unrealized P&L. So I'll go through this list very, very slowly, and you'll see that some names are up, some names are down, and the biggest losers, of course, are unfortunately Walgreens Boots, and unfortunately as well, Dollar General, which got absolutely destroyed. And our biggest winner, I believe, is Carnival Cruise Lines, up about 14%. So pretty happy with that, about that one as a whole. But that is the update for the portfolio. As I said, guys, I'll only ever add to this portfolio in the event we go into a deeper form recession, the markets plummet, right? SPY down 20%, QQQ down 25, 30%, everything getting destroyed. I will add another $1,000 to this portfolio equally amongst all the names, $50 each, and then we'll see, that'll be the end of it, and then we'll just let this one ride for like 2 years and see whether it's a good proposition to buy companies that have severely sold off, or are those companies potentially value traps, right? So we're going to do this experiment for the remainder of the entire year and the next year moving forward. So that's pretty much everything I had for you guys today. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the algorithm, guys. Second, if you haven't subscribed to the channel, consider subscribing. If you're new, we do these videos every Monday to Friday after the close. And lastly, if you have any questions at all, always feel free to ask me down below in the comments. Anything you want, a stock, technical analysis, a second opinion on an options play, macro discussion about rate cuts or a recession, anything you want, guys, leave it down below and I'll be very happy to answer you, usually within the first 24 hours. So take care, guys. Be careful tomorrow for these retail sales numbers, and I will see you guys after the close tomorrow. Take care and peace.